Hello, my dear students. A very good evening and a warm welcome to discussion on our September 24, the taxation paper, which was conducted today. I'm sure the students have written really well. And the feedback which I've got personally from various students is that the paper has been quite moderate. When I say moderate, it is somewhere between medium to difficult. That was the range of the paper which has come out in the today's examination. And I'm more than happy to share that our students have performed extremely well in the examination, and majority of the questions have come out from the conceptual what we have done during our lectures. That makes us even more happy and even more wonderful. So let me take some amount of time from you guys in order to understand what were the MCQs and what were the questions which have come up in today's paper, so that we get a clarity of thought in terms of what is the interpretation which we were supposed to be done and what is the interpretation we have actually done during the course of examination. So this video is specifically for those set of students who have written their inter-taxation paper today, my dear friends. So without any delay, do like, share, and subscribe to our YouTube channel. So let me go ahead and share the screen to discuss the concept. Yeah. Done. I hope the screen is visible for all of you. Students are telling MCQs answers. Yes, of course. That is why we are here for. Come on, my dear friends. So without any delay, let me start the discussion. So the first MCQ, if you look at it, we all know that it's all case study based MCQs which have come in the examination. So let me start looking at the first case scenario. Pawan was engaged in providing various services within the state of Rajasthan since May 2023. His aggregate turnover crossed the threshold limit on 4th of July 2023. He applied for registration on 2nd of August 2023. The concept we know very clearly that any person who is liable for registration must technically apply for registration within 30 days. And if you apply for registration within 30 days, the effective date of registration will be the date on which he is liable for registration. We already discussed this concept during the course of our lectures. We already discussed this concept, my dear friends. Am I audible? Kindly please confirm. Apply for registration within 30 days. Yeah, coming back to my discussion, my dear friends. So if you look at the content again, so he crossed the threshold limit on 4th of July 2023 and he applied for registration on 2nd of August 2023. He got his GST registration on 10th of August 2023. So technically, the effective date of registration will be what, my dear friends? 4th of July, since he has applied within 30 days. Since he has applied within 30 days, my dear friends, effective date of registration will be the date on which he is liable to be registered. Next point. After taking registration, Pawan started a business across India, including supply of goods as well. He dispatched goods pan-India based on orders he got for the goods dealt by him. He received an order from Delhi for which he has supplied taxable goods valuing 45,000 and the applicable rate of GST was 12%, my dear friends. Very good. He has also supplied certain exempted goods valuing 4,000 rupees. He made one invoice for both taxable as well as exempted supply. Very much that is okay. Next slide. He asked his tax consultant on requirement of generation of waybill for this order. The tax consultant informed him that requirement of e-waybill is based on consignment value of goods supplied. And I'm sure you guys know very clearly what is the meaning of this word consignment value in case of e-waybill. In case of e-waybill, my dear friends, consignment value very clearly also includes the tax amount. We should not see before the tax amount. We should always see after the tax amount, because e-waybill is required whenever there is a transportation of consignment of value exceeding 50,000 rupees. Are we getting clarity on this point, everybody? Any doubts? You can feel free to ask. Yeah, but we'll look at the taxable elements and we'll check whether the taxable value, including tax, is more than 50,000 or not. Exactly. So one student is asking one query. Let me answer that. 1 second. Yes, it's clear with that. Done. Moving ahead, my dear friends. Even being a micro enterprise, Pawan did not receive timely payment from customer, as a result of which he ran into severe cash crunch and eventually could not make on-time payment to his suppliers. He could not make what, my dear friends? On-time payment to his suppliers. Just 1 second. There's some connectivity issue. Just 1 second. Yeah, moving forward, my dear friends. While shutting down his business, he informed his tax consultant to cancel the registration. Tax consultant surrendered his registration online in GST portal on 25th October, and his application for cancellation was approved by proper officer on 31st of October. Let's see the questions what they asked. So the first bit, my dear friends, effective date of registration is what? I already told you the answer. Effective date is when the date when he is liable for registration. So that's the answer for the first bit. Second bit, consignment value of the goods supplied to Delhi by Pawan is how much, my dear friends? That figure will basically take it as the value including GST amount. Next point, my dear friends. Due date by which Pawan is supposed to file final return under GST is, friends, final return is supposed to be filed within 3 months from the date of cancellation, or within 3 months from the date of order of cancellation, whichever is later. So within 3 months, we are supposed to file. So technically, cancellation was approved on 31st of October. Within 3 months from there will become 31st of January. So that is the time by when we are supposed to file the final return. Final return, technically, we file in one form known as yes. Let me talk about the next bit, my dear friends. The fourth bit they have asked is, truth is God, a religious trust under section 12W of Income Tax Act provides service by way of renting of premises within the presence of a religious place, which is exempt up to what, my dear friends? We know very clearly that in case of renting of premises, it is very clearly exempt. It is very clearly exempt, but exemption will not apply if it is renting of premises for religious place. It is not exemption will not apply if it is 10,000 or more, dear friends. 9,999 per day. So the answer will become option C, my dear friends. Done. Next bit. Fifth bit, my dear friends. Wait a second. The separate point as such, Smita Limited made an outward supply of garments at agreed price of 5 lakhs. Company charged Go Green cess levied by local municipal corporation amounting to 10,000 for this supply. That will also include in the value of supply. As the customer made payment within 3 days from date of delivery, Smita Limited provided a discount of 5,000 separately as a customer-friendly measure, even though no prior agreement was made on the discount. what will be the value of supply? Value of supply will obviously be 5,10,000. That discount will not be reduced because we'll reduce the discount. We'll reduce the discount only when the discount is recorded in the invoice. Next point, my dear friends. Case scenario number 2. Prema is having a residential property in Nagpur, of which 1/3 is self-occupied and 2/3 is let out for commercial purpose. So 1/3 is self-occupied, 2/3 is let out at a rent of 12,000, fair 12,000 rupees. And fair rent for let out portion only was 30,000 per month, and municipal value for the property was 2,40,000. It is for the entire property. So we'll divide 2/3 and 1/3. And the standard rent is 3 lakh for the entire property. That also will divide 2/3 and 1/3. Municipal taxes are 10% of municipal value and are paid by her by 30th July 2023. Very good. She took a loan of 45 lakh rupees for construction of house from scheduled bank on 1/4/21. And she repaid the entire loan along with interest on 30th June 2023. When she repaid on 30th June 2023, for 23-20 previous year also, interest will come for a period of 3 months. That is nothing but the current year interest. How will you calculate current year interest? 45 lakhs into 10% into 3/12. That will become your current year interest. And construction was completed on 30th June 22. If it is completed on 30th June 22, my dear friends, 1/4/21 to 31st March 22 will become pre-construction period. And for that pre-construction period, interest will be 45 lakhs into 10%, which is 4,50,000. That will divide in 5 equal installment and will take 90,000 for each installment. And 1,12,500 is current year interest. Pre-construction interest plus current year interest, total will take deduction. She wishes to opt for a default tax regime. If she is paying tax for a default tax regime for self-occupied property, we cannot take deduction. We can take deduction only and only for let out property. Based on that, we'll do that working, my dear friends. Next, deduction for interest on loan. A very simple question they have asked. What is the deduction for interest on loan for 23-24? Clear, friends? But to understand that since she is paying tax under default tax regime, we cannot take deduction for self-occupied property. We can take only for let out property. So based on that, we'll do that working, my dear friends. The working, what I've got the answer as very clearly, 45 lakhs into 10%, 45 lakhs into 10% divided by 5 years, which was coming to 90,000 rupees. And deduction, what we'll get is only 1,35,000 is the deduction what we'll get, because we cannot take deduction for self-occupied property. We can take deduction only for let out unit because we are paying tax under default tax regime. Next, computer total income. That is simple point, my dear friends. Next, case scenario 3, if you look at Desai, age 52 years, is an Indian resident. He gives the following information relating to 23-24. Profit from business carried out in Dubai, which is controlled from Dubai, 13,10,000, received in bank account also in Dubai. If business is in Dubai, controlled from Dubai, received in bank also is Dubai. But still it will become taxable because he's a resident in India. Loss from business in Delhi, 4,50,000. But that loss will set off with business income. He also played some online games on particular website, game.com, and it's a manufacturer of men's shirts. During the year, he has won 6 shirts, and the cost of manufacture is 3,000 per piece, and they sell these shirts at 10,000 per piece. So basically, to play such games, he has deposited refundable deposit. So what? Ultimately, on the winnings, my dear friends, TDS provisions will apply. Getting the point, everybody? All of us, I hope we are clear with this point, everybody. So this TDS provision is a recent section, my dear friends. Section 194BA very clearly says that in case where there is a winning, on that winnings, very clearly TDS will apply at the rate of 30%, my dear friends, on all the online gaming. Any doubts? Feel free to ask. Good, fair enough. Next point. On 23rd May 2023, he gifted listed shares in Indian company to his son's daughter, Shania. These shares were purchased by him on 1/4/2020 for 65,000. And the market value of the date of transfer was 1 lakh rupees. and Shania sold these shares for a consideration of 50,000 on 31st March. What will happen, my dear friends? This is what, my dear friends, very clearly, it's a case where shares are gifted to his what, my dear friends? Son's daughter. And very clearly, clubbing provisions will not apply, my dear friends. Now, clubbing provisions will apply only when there is a revocable transfer of assets. He had taken a loan of 25 lakh for purchase of electric vehicle on 1/4/22 from Schedule Bank. He paid 55 lakhs as interest on loan during 23-24. Even though you paid 5 lakhs, you'll get deduction of only 1,50,000. And that concept is given by section 80 EEB. Next, he opts to be governed by default provisions of taxation regime. If his default provisions, my dear friends, he cannot take deduction for Chapter 6A, my dear friends. Because ultimately, Chapter 6A deduction will come only if you move out of default tax regime. I believe we are getting clarity on this point. Next point you see. During previous year 23-24, Kalia received 10,50,000 as family pension, and she had to spend 26,000 to get such income towards documentation and processing charges. She does not have any other tax regime. Assume she opts for a default tax regime. What shall be her total income chargeable to tax? We are talking about something called taxability of family pension, my dear friends. All of us getting clarity on this point? And what is the deduction in case of family pension, my dear friends? Deduction for family pension, what we get is technically 1/3 or 15,000, whichever is lower. Sounds good. Next. Sundaram owns 2 properties in Chennai, one of which is used by him and his family for residential purpose. Both houses are exactly identical. One of which is used by him and his family for residential purpose. And both are exactly identical. One is let out, one is self-occupied. And he took 2 loans for the purchase of these 2 houses. Stamp duty value of the houses is 30 lakh rupees. And during 23-24, he paid 4 lakhs as interest for these houses. He does not have any other income. He did not file his return of income. Within the due date. What shall be his total income chargeable to tax? And ultimately, in the question, they have not clearly told about default tax regime or the story of optional tax regime. So obviously, we'll compute the tax rate, will compute the deduction, and will accordingly take that 30% standard deduction and compute what will be the total income. This was a very comfortable question which came in the examination. Next point. Veena & Co. of Jabalpur was registered under GST under composition scheme. Outward supply of the firm for the month of July 23 was 10 lakh rupees, out of which 2 lakhs was for supply of services. Oh my God, some other service they are providing. And the preceding financial year, the firm was trading only in taxable goods. And the turnover of the concern for financial year was 100 lakh rupees. And we all know very clearly that in current year, my dear friends, we can provide some other service up to a value of 10% of turnover in the preceding financial year or 5 lakh rupees, whichever is higher. And it is only 2 lakh for supply of service. So that is very much okay. And the firm imported following services. Architect services from Mr. Vinod, a partner of the firm who resides in France. The said service was paid but not used for furtherance of business. Even though it is not used for furtherance of business, still it will be regarded as supply because it will come under section 7(1)(b), import of services, whether or not in the course or furtherance of business. Next, management consulting services from Lal, a renowned lawyer in Sweden, who was an ex-employee. If he's an ex-employee, he is not a related person because whose related person is only an employer-employee's related person. If he is ex-employee, he is not a related person. Even though it was used in the course of furtherance of business, no consideration was paid. Still, it is not a supply, my dear friends. because section 7(1)(d) will apply only in case of import of services by a person from a related person. Aggregate turnover of the firm crossed 150 lakhs and on 25th of September. And from that date, you have to obviously pay tax under regular scheme. And what is that they're asking? What is the tax liability for July 23? It is nothing but 0.5% plus 0.5% on 10 lakh rupees. Next, import of service that repeated as supply is, how much is that import of service? It is only 1 lakh rupees. That will become option A. We were not going to tax that 3 lakhs. Veena and Co will be eligible to claim ITC on its stock and capital goods as on which day? Sir, he is liable to pay under normal scheme on 25th of September. So one day preceding that, that is on 24th of September, whatever is the stock, on that stock, he'll be eligible to claim input tax credits. Are we getting clarity on these points, my dear friends? So these were the various multiple choice questions which were asked in the examination. And I personally felt some questions have been moderate and some questions have been pretty straightforward and simple. And with respect to 30 marks, if you look at, I strongly believe that at least some 20 marks are those which we can comfortably score. Minimum 20 marks as such. So I will not signify this paper as a easy or a difficult paper as such, but I would definitely say that this paper is a moderate paper, my dear friends. Moving forward to further discussion. Let me spend a little bit of your time on discussion of some part of descriptive questions, my dear friends. I'll tell you what was the treatment that was supposed to be done. Raman, resident individual, is 62 years. He is engaged in the business of manufacturing and sale of spare parts for motorbikes as proprietor. He prepared his accounts on a mercantile basis. Business is carried on the ground floor of a 2-story commercial building, and the WDV of which was 8 lakhs. He prepares accounts on accrual basis. Net profit is given, and further adjustments are given. Traveling expenses include 2,40,000 expenditure incurred on foreign tour to Taiwan for attending business exhibition and meeting with vendors. Very good. And out of which 40,000 is in Indian currency, 2 lakhs in foreign currency. And he has spent 10 days in Taiwan, out of which 2 days were utilized by him for attending marriage ceremony of a vendor's son. That means 4 days is for personal purpose. That 4 days, my dear friends, we will disallow because that will become a personal expenditure. Next. Administrative expense include 9525 paid towards interest on delay in deposit of GST. That will definitely allowed because penalty in nature only is not allowed. This will definitely be allowed. So now no treatment is supposed to be done. General expense include a sum of 3,88,000 paid to non-resident without TDS. If it is paid to non-resident without TDS, 100% will be disallowed as per section 40A1. Fire insurance premium of 66,000 for the entire building remained unpaid till 31st March 2024. So what? We are still following mercantile system. There's no problem at all. Expenditure of 75,000 was paid to Scientific Research Association under 35. Out of 50,000 was utilized towards purchase of the land by Research Association. So what? We'll still take full deduction. For what purpose they use is a secondary element as such. In case of contribution, we can comfortably take deduction. He lets out the first floor of the building and received the rent. Municipal taxes were paid equally and it was debited to P&L. Whatever is debited to P&L related to house property, we'll add back and take under house property. He sold a piece of land. He has acquired the land, sold a piece of land on 12th April, and he has acquired the land for 40 lakhs on 1st of January. And the gain is credited to statement of P&L. Why? Why? Reduce that and show under capital gains. Getting the point, everybody? Exactly, my dear friends. And this very clearly short term because 1st January 22 we purchased, we sold on 12th April 23. It is less than 24 months. Raman purchased raw material from Paul Industries, a micro enterprises, for 49,000. However, payment was made on 5th April by check. No written agreement for payment existed between Paul and Raman. Another supplier, a small enterprise with whom also no agreement existed, was paid on 1,34,000 in cash. Why is it paid in cash? If it is paid in cash, disallowance will come, my dear friends. Raman acquired a registered trademark. But of course, my dear friends, you have to note one important point. Since it is paid in cash in next year tax treatment may come. But one more point is very clear that we need to recall the concept of what do you call micro small enterprise, my dear friends? Micro small enterprise 43B clause we are talking about in this particular case. If there is no agreement, you have to make payment within 45 days. Are we getting clarity on the point, my dear friends? All of us. This concept is the latest amendment 43BH. I hope you know this concept, my dear friends, very clearly. The logic of the law is very, very clear that you have to pay maximum within 45 days. And if there is no agreement as such, you have to pay within 15 days. As simple as that. Next. Raman acquired a registered trademark of 15 July for 2 lakh rupees and he started using trademark for business. And Raman omitted to enter a transaction related to trademark in his accounts. Then take the depreciation. Depreciation will come on copyrights and trademark at 25%. He brought one car for personal use. He started using the car for business purpose. As on the day, market value of the car was 2,10,000. Even though it is 2,10,000, they can still claim depreciation on the entire cost itself, my dear friends. This concept is given by depreciation section 32. Next point. He incurred 2,50,000 purchase of new machinery to be used for production of spare parts. If it's production of spare parts, then purchase of machinery for production will also claim additional depreciation. He has paid tuition fees for education of his daughter to a college. ATC deduction will take. Tuition fees for full-time education for 2 children. Raman incurred 9,500 cash for preventive health checkup. For preventive health checkup, we can take deduction maximum how much, my dear friends? Only 5,000. Donation paid to a registered political party by check, take the deduction. And they asked to compute total income and tax under default and option. Which option is more advantageous? A comfortable question, guys. Madan, citizen of India, Karta of HUF, is employed and is drawing a salary in India. He is an Indian citizen. He purchased one property in Mumbai for 18 lakhs in individual capacity. Market value of 32 lakhs and the value for stamp duty is 23 lakhs. On August 1st, he was transferred to the branch office and he left India on September 1st, my dear friends. Indian citizen leaving India for the purpose of employment. And we look at what, my dear friends? 182 days. And let us see what has happened. He left India on September 1st. Okay. Then he has also gone out of India for so and so years. He visited India from Jan 1st to Jan 15 for training or a project and received 15 days salary in India. So he's also an Indian citizen who is coming to India for a visit during previous year. Next. Raji, one of his friends, gifted him a sculpture in India on August 10th. Market value is 45,100. Gift is taxable only if it is more than 50,000. I am sure we guys know this concept very clearly, my dear friends. Moving forward, determine residential status. Okay. A proprietary firm of Yogesh has paid amount of so and so rupees towards professional fees. Tax was not deducted. Amit has filed his return, taken a professional fees and the tax is declared. This concept we know very clearly, my dear friends, that in case where we made payment to somebody, we have not done TDS, but the opposite person has considered that income and filed the return. Then we are not regarded as assessee in default. And it is treated as if we have done TDS on the day when he paid the tax and filed the return. Next point is about car manufacturer, sold the cars. Sale price of the car is given, turnover, that is about your 206C 1H and 184Q. Next point, question was very clearly related to salary income. Basic pay was given, DA was given, leave encashment was given. He also received salary in advance. And we know that advance salary is taxable on due or receipt, whichever is earlier. The next point is all about rent-free accommodation, an interesting point. Refresher course, treatment of the salaried employee. Fine. Next point is all about capital gains question, my dear friends. Agreement to sell the property and the stamp duty value concept is given. He purchased another agricultural land concept is also given. That is section 54B story. Next. Next point was about incomes and losses. He received partner at the firm, which will tax under business income. Then brought for house property loss is given, let out is given. Interest or enhanced compensation, 50% will be taxable. 50% standard deduction will come. Gift from grandfather's younger sister, that is also taxable. Dividend also will be taxable. 75 lakh maturity proceed from LIC. He paid 6 lakhs as annual premium. Sum assured is 65 lakh. If sum assured is 65 lakh and the premium paid is what, my dear friends? Premium paid is less than 10% of sum assured. So maturity amount will not be taxable. I mean, these questions are those straight questions, guys, which we have discussed a lot during our classroom discussion, my dear friends. Vegetable filed its return of income on 15 December. Accountant realized that he has forgotten to claim genuine expenditure. He wants to file a revised return as assessment is not completed. Is it valid? Definitely answer is yes. You still have time. And you have time only till 3 months prior to end of assessment year or completion of assessment, whichever is earlier. So you have technically have time till 31st of December. Next, salary income of 2 crores. Also on dividend of 4 lakhs. He wants to file return of income through tax return preparer. Possible. Tax return preparer cannot file only of those person who is required to get books of accounts audited. She did not file the TDS return. She wants to file updated return. 139.8A, my dear friends. Updated return, we know what is the additional tax that is required to be paid. Next point was about GST. A 10-mark question, pretty simple question they have given. Turnover of the preceding year was 3.2 crores. Interest and supply of taxable goods is given. And they promised to complete contract, but they were not able to complete contract. They got consideration for non-performance of contract on time as decided by pre-return agreement. So basically it is like a liquidated damages. Booking of economy class ticket, my dear friends. On the ticket price, there is no GST as such. Because in case where the flight ticket is going in economy class from in an airport located in Assam, Manipur, Mizoram, Nagaland, Tripura, back Dogra located in West Bengal, the GST provisions will not apply, my dear friends. He purchased goods and they want to give debit note for post-delivery services. That is okay. That is inward. We'll take input. DF has sold one of its units in Pune as a going concern. Okay. They provide a service to organize exhibition. That is again outward supply. Amount received for intrastate supply services. So basically, you have to bifurcate what is outward, what is inward, and compute the duty, compute the net GST liability. Confectionery items. No question of GST input. That's it. Next, consideration received from neighboring housing cooperative society. They have agreed to install effluent plant for treatment of water waste management. That is covered in exemption list. Consideration received from distribution of passes for cricket match. And total 500 passes have been distributed. If the each ticket cost is less than 500 rupees, that will also be exempt. Services given of booking air tickets in economy class for flight between Mumbai to Manipur. That will Mumbai to Manipur. That will again be exempt. Service given for construction of building to state government in relation to function entrusted to municipality. Very, very interesting point. If the cost of materials is not more than 25% of the total value of contract, that will also be exempt, by your friends. So GST payable is what they asked. He is a registered dealer in AP, trading in different types of machinery and related services. Turnover of the preceding year was 1.3 crores. It was first year, so they have not started. It was first year, so they had not started for providing services. From 23-24, they are planning to provide repair and maintenance service of 6.25 lakhs, for which they have to purchase some raw material of 5 lakh from other state. Can they opt for composition scheme? Definitely answer is yes, no problem, my dear friend. Because the logic is very simple. They can provide some other service up to 10% of turnover in the preceding financial year or 5 lakh, whichever is higher. And 10% of that 1.32 crores is 13 lakhs. So that is okay. And they are buying from intrastate. That is okay, my dear friends. Interstate outward is not allowed, but intrastate inward is very much okay. Garima, having permanent residence in Gujarat, purchased car from Rajasthan to take advantage of lower registration charges. Garima took delivery of car from Jaipur and returned with the car to residence in Gujarat. Address of Garima recorded in the invoice issued by Kiara mentions only Gujarat. So what? That's enough. That's enough. Just recording of name of state of person is enough, and that will only become the place of supply. Advertising agency display the product. It's a clearly an advertisement services, my dear friends. We'll apply the provisions of general rule and compute the place of supply. Determine the place of supply. Mohan, a registered person in Salem, makes intrastate taxable supply of goods 13.57 inclusive of GST. And the rate of GST is given. We'll calculate reverse working. What will be your view with respect to applicability of TDS provision? TDS provision will apply because contract value that is excluding GST is more than 2,50,000. And that TDS is required to be deposited by 10th of next month. Every registered person executing works contract shall keep separate account. Obviously, he need to maintain records as to what is the contract executed, what is the revenue earned from each contract, what is the inward supply related to that contract, what is the subcontract related to the works contract. All the details have definitely to be maintained. Describe provision related to import of service by registered person as 71B, 71C. Logic is very simple. 71B is import of services for a consideration whether or not in the course of furtherance of business. 71C will apply in case where import of services by a person from a related person if it is in the course of furtherance of business. And what are the category of persons exempted from e-invoicing? Very clearly, Department of Government is exempted from e-invoicing. GTA is exempted. Correct, no friends? This point, how many times we discussed during the discussion of RTP, during the discussion of RTP, during the discussion of mock test paper, all those cases, we have discussed the concept of exemption from e-invoicing, my dear friends. Clear? Insurance company, banking company, financial institution, NBFCs. Next. No act or proceedings of council shall be invalid merely by certain reasons. What are they? Simple. Just because the person who is there in the GST council, there is a vacancy of that person, or where the procedurally the person is not admitted properly, or there is a lapse in procedure, but there is no lapse in terms of the decision taken. Commissioner has notified certain persons to maintain additional records under Rule 56. Agent is one of them. Obviously, agent is required to maintain details of the principal and is required to maintain details of every principal, what records, what supplies are made on behalf of principal. All the documentary evidences needs to be maintained by the principal mandatorily, my dear friends. So this is the interesting paper which has come up in the today's examination. And the whole idea of today's discussion of this particular video is to just to give an insight in terms of what kind of questions have come in the paper so that you get a clarity of thought in terms of what paper has come today. And a lot of students were asking MCQs answers during the discussion. I've already done that MCQ answer discussion, my dear friends. Any doubts, you can feel free to post in our forum query. We'll be more than happy to reply, my dear friends. Thank you so very much. Take care. See you all in the next video. Bye-bye. All the very best for the upcoming examinations, my dear friends. Stay tuned to IndigoLearn. Do like, share, and subscribe to our channel. Thank you.